On to the next exit strategy. Going to talk about flipping. Going to go through same thing, some benefits, some negatives, and also some examples. And let me just say real quick, to differentiate, whenever we went through wholesaling, our example, when we actually closed on the property, did buy it, and then did minimal cleaning and such, and then sold it, I consider that a wholesale, because we didn't actually have to go and do the renovation ourselves and the work on the property. Whenever I speak about flipping properties, that's more or less closing on the property, doing the renovation, and then looking for that end buyer. I consider when flipping properties, you're selling to that retail end buyer, the person that's going to live in that property. So let's talk a little bit about flipping. One of the large benefits of flipping property is that you're going to have bigger paydays. Of course, when you wholesale a property, you're going to make what you can on it based on how good the deal is, but the large profit is left in the deal for the investor that does the renovation and takes it to completion. So a huge benefit is that you can realize potentially a large chunk of cash that then you can use for whatever reasons that you want in your business or personal. The negatives stack up a little bit here as far as how I look at things. We definitely have flipped properties for years and used it as one of our strategies, but it's always been just one spoke in the wheel for us. It is the most costly way to sell property. Whenever you're dealing, typically, whenever we're retailing property, we go ahead and list it with an agent, which we could do the for sale by owner thing, which a lot of times we'll start out in the first week or two. We'll see if we can find a buyer once we complete the renovation. But after that, time is money. We like to delegate and utilize other resources, so we usually hire a realtor. So you've got your realtor fees. Typically with retail buyers, they get inspections done, and then you have a laundry list of things that need to be done to the property. It's just, whenever we go over some of the other strategies, you'll see what I mean here. Taxes. Taxes also affect, of course, the cost to sell the property, depending on where you're at personally and in business. It'll depend on how much taxes you have to pay, but capital gains can get you. You have to watch out. There's a very high level of risk here, because ultimately the question that you need to ask yourself is, what if the property doesn't sell? What are you going to do? We're talking about exit strategies, and the key to real estate is really having multiple exit strategies lined up, so that if your primary strategy does not work, you have a backup. If you go in to flip a property and you buy it, you renovate it, and you put it on the market, and it sits there and doesn't sell, vacancy destroys profit. And ultimately, if you don't have a backup strategy lined up to secure some type of long-term financing, then you may find yourself in some hot water. It's risky. You're not creating wealth. Just like wholesaling, you're in and out of this deal. Each piece of real estate is an asset, and the more assets that you can hold on to, you're creating that potential for long-term wealth, appreciation, building your equity, cash flow, that sort of thing. And flipping property requires more resources, of course, than wholesaling, because of actually going through the process of renovating the property, managing that renovation, and taking it to completion, to the sale of the property. I'm going to give you a quick example. A property we bought on Amberjack. This was in Somerville, South Carolina. We got this lead from a TV commercial that we had run. And a quick key here, follow-ups are the key to the business. Because I first talked to her about her selling her property, and it wasn't months later, it was months later, 3 to 4 months later, of me calling and following up until we got the signed contract on the property. So we bought the property, got a great deal on it. It required about a $25,000 to a $30,000 renovation, and we were putting in some upgrades, doing a top-notch job on it. From the day we bought it to the day we sold it, it was 4.5 months, and our net on the property ended up being around $26,000. So it was a good deal for us. It worked out. We ended up selling it in November of that year, so I was definitely happy to go ahead and sell it before the winter months set in, because usually it's a little slower there. But flipping can be a great way to create some bigger paydays for you. Keep in mind, exit strategy. What if the property doesn't sell? What are you going to do?